morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Plenty of activity in these markets.
Sure is.
A week is a long time in financial markets.
Certainly is when it's a 7-day-a-week roll, and that's when you get geopolitics like what we saw over the weekend. It sure adds a lot of spice.
Plenty of activity. So starting in China, the economic growth or the GDP numbers, they're actually coming out later today with retail sales. GDP is expected to come in around that 5% mark, which is slightly lower than the last number. But once again, this has a not only impact in China, but it's quite a big impact on the Australian economy as well.
Of course it is, absolutely. And any commodity trading currency, Canadian, certainly the Kiwis, and yes, very much ourselves.
We'll see how that comes in. And I know last week we had the CPI numbers in China as well. It came out at 0.1%. They were expecting 0.5%, so it's quite a bit lower. And looking at the chart there, over the last 4 of the last 6 has been
low inflation, deflation.
Yeah, so big impact on China. Also, from an Australian perspective, the iron ore price is coming off. It's sort of hanging around a reasonable level at the moment, but you would think moving forward, the demand is just not going to be there for iron ore.
Well, no, you wouldn't. Well, I think it's it'll be interesting to see that you've had a very strong rally across base metals. Copper's back at 9,500, tin's bid up, aluminium very strong, nickel, lead, zinc. So whether it, that charge north for the base metals, whether it does take, I know steel prices are up. We'll just have to see what happens with iron ore. But yeah, you need consumption there to. They're not sending it over there to, put behind doors, are they?
No, not at all. Over in the UK, the GDP numbers came out just slightly above zero. But as we can see from the chart, it's nearly 1 month down, 1 month up, basically. And we know the impact of the higher interest rates in the UK at the moment. It's pretty tough going over there. But the Bank of England didn't drop rates last week.
No.
Market's expecting 25 points in June, but once again, it's those higher inflation numbers that's causing all the problems.
Absolutely, and just again, how does it materialise over this quarter, and with higher energy costs and the input straight through to, inflation. Let's see where we are in August, but you'd want to see strong spending, good consumption to try and get some traction with tourism dollars coming in because it's a hot place to visit. We'll just have to see whether the consumers got the credit card and they're spending up.
That's right. The US is causing all the volatility at the moment. The inflation number came out last week, slightly higher than expected, which the market did not like.
No.
The likelihood of a drop of interest rates is, you would think, pretty slim at the moment.
Well, yes, absolutely. I mean, I think June, for that to get traction, you're probably less than 50% now. I noticed Harvard professor Larry Summers saying that there's a 20% probability of a rate hike. Let's just see where that rolls over the next couple of months. But yeah, if they can't wrangle or wrestle inflation down, then it'll be quite fascinating because they don't want to do it, I wouldn't think, too close to an election.
No.
Maybe September's going to be the blast off and just one rate cut for the election. You wouldn't do it in October.
No, but once again, it depends on these inflation numbers. If they continually creep up.
Yeah, very, very difficult.
Yeah, you would sort of think a hike would be unlikely. The more likely scenario would be just to keep the rates as they are for a much longer period of time.
Yes, but that doesn't do, from a political standpoint, the Democrats any joy. They'd be looking for some form of rate cut, at least one to show some confidence to the Biden administration. That's if he's still, the principal man in the game. I'm not sure whether he will be. He might be, change of batter.
Well, who knows? That's right. But
I don't think it's Kamala.
No, you wouldn't think so either. No. The irony of all this, though, is that the US economy is extremely strong. So the GDP is strong. They're near full employment. The retail sales figures came out yesterday, which was another strong number of 0.7. They're expecting 0.4.
Yeah.
So in normal circumstances, and the economy has basically absorbed all of those interest rate rises over the last 18 months.
Very much so.
From an outsider looking in, you go, wow, the economy's in fantastic shape.
Yeah. When you stack it all up and look at the numbers, and you said when we were off air, as far as those Goldman numbers, the banks reporting, they've been strong as well. So, yeah, it's I mean, that's a wonderful barometer as far as the financial services health of a nation.
Yeah, I think with the banks, as we said, Goldman's an outstanding result last night. Bank of America will be the next big one to report. They are more of a retail bank, whereas Goldman's are more of an investment bank.
Yes, and their trading arm was incredibly strong.
Yeah, so it'll be interesting to see what Bank of America come out with in the next couple of days. If that's a strong number, then that gives you a good sense of the health of the American consumer.
Yes. I think you mentioned, is it correct, 28% up?
Goldman's profit, from 12 months ago.
Well, I suppose if you've got a couple of billion, or I don't know what the size of their book, but I'm sure they'd be leveraging on their prop traders and all their, internal. I know their trading arm did very well. But if you've got a raging bull market in equities, and they're in the Mag 7, I'm sure they would be, trading it aggressively.
Well, you would think so.
Spitting out plenty of money.
Yeah. No, well, there'd be plenty of money going into those stocks. It's obviously that's the case. So.
Yeah.
But interest rates, which drive pretty much every market. We've seen both the 10s and the 2s in the US Treasuries creep up.
They've bounced, haven't they? Since Christmas.
Yeah, the 2 years now at 4.92. It got to a high back in October last year of just over 5.2.
Yes.
So only like 30 basis points off
shy.
That high.
Yeah.
And yeah, it just tells you how the mood of the market has changed considerably only in the last month or so.
Yeah, very much so. And again, I think there's some... From a trading or trader's perspective as far as bonds, there's no thought here that we're going to get first off, it was going to be March. Then it was going to be possibly April, and then maybe June. Now it's rolling out to maybe September. So I would think, I wouldn't be surprised to take that 5.2 out over the next couple of months. We'll just have to wait and see. But if you get some ongoing geopolitical tensions, I'm sure that'd spike prices a little bit higher as well.
For sure. And on the back of this, the dollar index is
106.25. Currencies are crushed.
Yeah.
Yen's at 154.
I know.
When do they see intervention?
Well, you would think soon.
You would think soon.
Common sense would say very soon. Time will tell.
Time will tell.
Pretty reluctant on that though, the BOJ.
Gold's at 2,400.
Yeah, which we've got here. We've got the gold and the silver chart, which obviously a very close correlation there. But gold.
Oh, it's had a big run up since the start of the year. It's been dramatic. A look at the chart there. It's up hundreds of dollars an ounce. Silver's been ballistic. So yeah, I'm sure it'll continue, Andrew. I think there's enough momentum at the moment. Because we did a talk a couple of weeks ago, you and I, as far as central bank buying, China, huge consumption, and then Turkey and India. Yeah. Retail sales, I'll say this, Costco, 200 million a month in gold sales to consumers. So they walk in there, get a pint of milk or a gallon of milk, and you get an ounce of gold.
There's a company for you, Costco. Wow.
Yeah.
Probably arguably the best retailer in the world.
Yes. We'll cover that one day.
It is, yeah. And the majority of the revenue comes from the membership.
There you are.
Yeah, about 80% of the revenue comes from the membership.
Well, let's pull it apart maybe in a week or two.
Yeah, it's a good number. They'll be reporting soon as well.
Yes, of course. We'll wait for their reporting and then we'll pull it apart for the viewers just to show them, the strength of the US consumer.
Yeah, for sure. All right, we'll keep an eye on things over the next week. Obviously, the banks will finish
I think we'll
reporting.
look at it every hour.
That's right. The big tech companies will be coming out in the next sort of 7 to 10 days, which will be interesting to see how they're travelling as well. But we'll once released, we'll pick it apart.
I'll look forward to it.
Excellent. Thanks, Pete.
See you, Andrew.
And that's the XM.com weekly market update.